Go ahead.
Okay, so again, good afternoon, everyone. I'm Margie Smith, a business consultant with the FIU Small Business Development Center that covers both Monroe County and Miami-Dade. And I'm here today, co-hosted by Judy at the Islamorada Chamber of Commerce to put on a webinar. Oh, looks like Judy's online, good. To put on a webinar on loan forgiveness. So we know that everyone has been going through the process of trying to get these PPP loans, and the latest step in the process has been that the application came out a little over a week ago from the Treasury, and we are trying to walk you through that form. And really our goal here is to make sure you optimize the amount of forgiveness that you are entitled to for that PPP loan. Again, that's the Paycheck Protection Program loan, which was done through a local bank or a bank of your choice, which is really done through a traditional SBA 7A backed loan. That was the vehicle for the PPP, which is a creation of that legislation a little over a month ago now, the CARES Act. So Judy, if you're still, if you're with us, if you want to do a quick intro, otherwise we'll jump right in.
Just a very quick welcome to everyone and thank them for joining us. I know that we have a lot of questions and we're eager to hear your answers. So thank you all for doing this.
And just on a quick note before we get started on our format here, we're going to be starting with sort of a high-level outline and then jumping to quite a bit more detail as we go through. You'll have the option of putting in questions in the Q&A box there, but we're going to keep most of our questions to the end. I think you're going to find that I will probably have asked the question you intended to ask before the end of this as well. And I also want a quick disclaimer, you know, SBDC business consultants, we technically don't do accounting or legal. Obviously, the things we're getting into today kind of are teetering on the edge of those things. But we have got together some experts to work on this. I'm going to introduce them next. Raju Mohandas, who is with our team. He is one of our business consultants out of the SBDC at FIU, serial entrepreneur, accounting background, been doing business consulting for a very long time. So I'm going to have him go ahead and get started, and I will moderate. And again, feel free to share your questions in the Q&A as we go forward. But I suspect as we get more detailed as this presentation goes on, we may have even addressed your question throughout that moderation. Thanks so much, Judy, for the opportunity. With that, Raju.
Hi, everybody. And Judy, thank you for allowing us to kind of share what we found out about the loan forgiveness application process. Margie, can you go to the next slide? Okay, now the key here is this is a high level, and we're going to go over it on a broad sense, on maybe a 50,000 square feet look at it, and how much will be forgiven has 3 steps. Number 1 is obviously to determine the amount possible loan forgiveness based on the 8-week period that the loan is made. Determine the amount, if any, how much will it be reduced based on employment or reduced salaries and wages. And then the third one is the 75-25 threshold that was part of the original process. Next slide, please. Okay, let's look at how do we determine the maximum amount of possible loan forgiveness. Obviously, the payroll expenses is defined as not to exceed $15,385. That is for the period of 8 weeks, okay? That how we arrive to that number is you take the $100,000 divided by 52, multiply it by 8, give you $15,385. What does it cover? Gross salary, wages, commission, and gross tips, okay? Now, I know a lot of them will have questions on the tips. So I know when we cover it in more detail later on, we'll cover that in detail, but on the broad sense, it will include some tips. Vacation, parental, family, and medical leave. We cover more of it and more details of it also, and allowance for separation or dismissal. So if you had any employee that you separated or dismissed, that also would be considered as part of payroll expenses. Employer contribution for employee group health, employer contribution to employee retirement. Right now, it includes like 401ks. Payment of state and local taxes, not federal taxes. That's the other point that you need to kind of make sure. Federal taxes are not going to be part of the forgiveness. Okay. Now, for a note on independent contractor and sole proprietor, payroll costs only include wages, commission, income, or net earning from self-employment or similar compensation. They go back to your Schedule C as you have, as you file. That is based on 2019. Now, non-payroll expenses are mortgage interest payments, rental lease payments on real estate or personal properties, similar to any equipment or machinery that you may have. Utility payments for business for electric, gas, water, transportation, telephone, and internet services, okay? But they all have a date of February 15, 2020. This date has a very big significance moving forward. That is one of the major dates that you need to have everything prior to that, okay? And as we go to the loan forgiveness, it is one of the key dates that you need to make sure that you have in your mind. For independent contractor and sole proprietor, just like I said, it will be part of your deductions of your 2019. If you deduct it for any of those pieces, it will count. If it's not, if you did not deduct it, it will not. Okay. Next. Okay, identifying the 8-week period. Okay, you have to, as it stands right now, and there's a lot of other questions going on in Congress right now to extend, but as it stands right now, it's 8 weeks. For borrowers with biweekly, you can have an alternative way of calculating your 8-week period. But technically it is once you receive the money is the next payroll period that counts, okay? Next slide, please. Now, to determine the amount, if any, by which the maximum loan will be forgiveness will be reduced, that's where a lot of the questions are going to come up, and that's what we're going to dwell in most once we get into the detailed aspect of it. For employees who earn 100,000 or less in 2019, there are some key benchmarks that you have to look for. January 1 to March 31st. You have to look at those dates. And salary and hourly wages during the 8-week period is less than 75% of the average pay. Now, there is a key point here, the safe harbor. As we will go through some examples, you will see how this safe harbor kind of saves you not having a loan, okay? It is a key on it, and the key here is, and the date is June 30th, 2020. So as we still have about a month, about 5 weeks to go, you can plan ahead and you can look at it, because the February 15th is one date, June 30th is another date for the safe harbor, okay? So just keep those two dates as key points as we move forward. Next, please. Now, determine the loan forgiveness reduction is based on the borrower's loans forgiveness review if the average full-time equivalency, FTE, during the 8-week period. We will go to an example, and these are the reference period, February 15 to June 30th. Those are the days that we are looking. February 1st to February 29th, or in the case of seasonal employees, you may use May 1 and September 15, 2019, the 12-week period. So you do have some option, but you have to be very consistent throughout the whole process, okay? Now, exceptions will not be penalized, if the borrower made good faith written offer to rehire the employee during those 8-week period, and the employee was fired for cause or resigned, or requested reductions in hours. Now, you must have it documented. It's not just saying it, and documentation is the key again here. Written documentation. Okay, next. A borrower's maximum loan could also be reduced if it doesn't meet the 75% benchmark. You must use 75%. As the example says, if your payroll expenses for the 8-week period equals 75, your total cannot exceed 100,000. Anything you receive above 100,000 will be considered a loan. Next slide, please. Loan forgiveness will equal to the smallest of the following. Obviously, you'll have in the application the 3 points, and it's going to be the smallest, either the PPP loan, the maximum loan forgiveness, and the maximum loan forgiveness with a 75% threshold. So they will choose among the 3, and the one that will be eligible, or the amount will be the lowest of those 3. Next, please. Okay, what happens if there's any money not forgiven? Okay, you will have 2 years to pay a loan at 1% interest, and the first 6 months will be deferred. There are no prepayment penalties or fees. So any amount not forgiven will become automatically a loan, or you can return the money either way right after that. Next. Now, these are some of the congressional changes that they are talking about. Obviously, changing that 8-week to 24 weeks. Some of them are talking about 16 weeks. We don't know what it will end up being. So the key here, or the problem, is that already some businesses have received PPP loan for about 5 or 6 weeks. The first disbursement was April 3rd. So some businesses are already in the 5th or 6th week of the process of using the PPP loan. Next. Okay, this was actually what came out from the U.S. Chamber of Commerce. It was a very detailed, I liked it a lot, and that's why I'm giving credit, and I just kind of put it together in a slide presentation format. Okay, so that's where you can get the information from directly also. Now we'll go into more details. Any questions on the oversight or overview of the whole program? Margie?
Yeah, see, I'm looking in Q&A right now. Here we go. Can a startup or small business with a net operating loss apply for this?
Pardon? Can you repeat that again? Sorry.
Sure. Can a startup or small business with a net operating loss apply for this?
Well, if you receive PPP monies, obviously they're considered it, okay? So you will have to go through the whole process of the application to have the loan forgiven. The first requirement, you must have received a PPP loan to even be accepted for this process. I'm hoping that the gentleman or the person asking that got some money on that, okay?
I'm going to hold off actually on the other questions. I think we're going to be addressing some of them.
Okay, no problem.
Continue on.
Yeah, now this is more in detail of the actual forgiveness loan application.
Oh, sorry, got to get out of Q&A and I can, there we go.
Okay. These are some of the documents that you will need to submit with the PPP loan forgiveness, okay? Obviously, the loan forgiveness calculation, Schedule A, which is one of the documentation. We're not going to cover in detail, but what feeds the Schedule A, we're going to go into it. The payroll documentation verifying the eligible cash compensation and non-cash benefits payments from the covered period. Bank account statements or third-party payroll service provider reports documenting the amount of cash compensation paid to employees. So that's why originally we told a lot of clients to please make sure that they have all of these documentation in hand and saved up for this, because it was going to come and being requested. Tax form, where it'll be 941s, okay, and state quarterly business and individual employee wages reporting, unemployment insurance tax filing, all of those official documentation that will need to be provided to show that you have made those payments. Obviously, payment received, canceled check, account statement, or amount of any employer contribution to employee health insurance, retirement plans that the borrowers included in the amount. Now, you do not have to include everything. That's one of the key. You do not have to include everything, but if you're going to include it, you must provide the information. Okay, next. Documentations on non-payroll items is business mortgage interest payments, okay? And you must have had this loan statement from February 2020, okay? Business rent or lease payment, copy of current lease agreement, receipts or canceled checks, verifying the payment for the covered period, and business utility payments also. And we'll cover in more details what might be covered, because you can go back to a previous month, if, like March and April, if you got the payments later. So if they were, so you can include them, but obviously you're going to use most of your funds quicker, but it can be done. Again, document that each borrower must maintain, but is not required to submit. This is all the calculations, all the documentation supporting the way you got to Schedule A. Now, one of them is obviously we're going to cover Table 1 and Table 2, where it includes the salary, hourly wage reduction calculation, compensation for anybody who gets $100,000, documentation regarding an employee job offer, refusal, firing. Again, you need to have that documented. And documented supporting the PPP Schedule A worksheet, FTE reduction, full-time equivalency reduction, safe harbor. That's where we're going to spend most of our time, because this is how you're going to be able to figure out how much is exactly going to be your reduction, if there is a reduction. Now, one key point here, the borrower must retain all documentation in his file for 6 years. The lender may request these documentation as verification. Since this is done through your lender who gave you the PPP loan, he can have the right to come back and say, show me the documentation for any of these numbers that you are providing in the application or the supporting documents. So just be aware that if they do ask it, it's not going to be uncommon, okay, as they are responsible for that process. And they're going to be in the process. Okay. Okay, I think so. The slide before, there was a slide before. No?
Sorry about that.
Okay,
So we're
no.
getting more detail here, just to be clear.
Okay.
And break it apart.
This is the actual application. Okay. Now, if you see line 8, line 9, and line 10, you're going to fill it up with numbers there. And that's, you're going to choose, number 11 is choosing the smallest of those 3. And that's how you're going to figure out, we have to go through the whole process of the Schedule A and the worksheet to fill line 8, 9, and 10 primarily, okay? The other portions are pretty quick, easy, quick. And the first part, which is the top part, is going to be what we're going to cover in the next slide, okay? Okay, one thing they want to know is employee at the time of loan application, employee at time of forgiveness application, PPP loan disbursement date, the EIDL loan advance. The EIDL loan will be adjusted against the PPP loan. The covered period, you have to choose which periods you want to put in, either the alternative payroll period or, or specific 8-week period right after you got the money. Okay. They do.
Advance amount. So let me just clarify for a second, just from what you said. So the EIDL advance amount, we're talking that amount that was $1,000 per employee up to $10,000. Only that.
Right, up to 10,000. Up to 10,000. They will ask the specifics of the EIDL loan number and everything. So you better have that handy also. If you got any money, obviously, like the EIDL loan will be adjusted towards that number. So if you got 10,000, whatever you got will be reduced by that 10,000.
From the advance, not the entire.
From the advance, whatever you got from the advance will be adjusted on your loan forgiveness. That was one of the key when they started this program of double dipping, meaning getting duplication of benefits. They wanted to avoid all of that aspect of it. So this was one way of them doing it, okay? Now, summary of costs eligible for forgiveness. Again, you have the 8-week period, as long as not to exceed 100,000 per employee. Non-payroll, again, covered mortgage interest obligations, rent obligations, covered utility payments, and eligible non-payroll costs cannot exceed 25% of the total forgiveness. Those are just quick reinforcing what we went originally. This is your Schedule A. This is going to be part of your application that you're going to submit. And obviously, it's just totals from all the work that you have done and collected. Okay, so again, the key point is the full-time equivalency, FTE reduction calculation. We will cover that in detail, and that's where a lot of the questions are going to come up, and that's where it gets a little bit complicated with the calculations
And just a
getting
quick
to those final numbers.
there. We also had put in the Q&A. Brianna, can you just point that out too? I believe we have the link to the forgiveness application itself. Page 6 was the Schedule A, if you wanted to print that out for going through this process. And also page 9, I believe, we have Schedule A and the worksheet, both individual pages that are useful to have out as you go through this process here at the webinar. But that's in the link in Q&A.
Okay. Now, as you can see, this is your worksheet. We're going to cover Table 1 in detail. Table 2 is basically safe for employers who have made $100,000 or more, and then you're trying to calculate the 100,000 limit. We won't spend too much on that Table 2 because the cash compensation will be $15,385, and the average FTE will be 1 because they're salaried employees who are making more than 100,000.
Can I jump in here for a minute too, Raju, on that cash compensation? I think it's really important to understand. I think a lot of folks figured when this thing first came out that that $100,000 cap was gross wages. And if you look at the way it's being determined here, they're talking total compensation. So it doesn't necessarily mean you can go $100,000 wages and then retirement value and everything else. It's 100,000 total, right?
Correct. It's total cash compensation. So if they have any allowances for vehicles or things like that, which is part of their pay, yes, all of that is cash compensation. Everything that you have, compensation. So when you start looking at cash compensation, even on Table 1 or Table 2, it's including all types of compensation they've got. It's not just actual salary, period. It's all the cash compensation they got, which includes all of the other pieces.
Thank you. That's important to note. I think a lot of us assumed we had 100,000 in salary plus, and it really wasn't. It was actually 100,000
No.
with other things.
It's 100 equal to all salary plus.
Thank you.
Okay. Okay, now the key here and the way you can actually save, and we'll go to an example, is the FTE reduction safe harbor. We will go to an example where you can see how important the FTE reduction safe harbor pointed. This is your catch-all and kind of may save a lot of companies in not having a loan. My concern is that a lot of professionals may not go through the whole process and may land up with a loan, okay? So having to understand the reduction safe harbor issues will be critical. And U.S. business owners should be requesting or at least asking those questions to your accountants, CPAs, or attorneys, okay?
So would it be, would you say, representative of what they're looking for to say the top box is those folks who have the total compensation under 100,000 who are going to be fully qualifying for forgiveness. And then this second table is just listing those folks who have compensation beyond 100,000, whether or not they're included in that number from above, right?
Right, correct. So you will have to, on the Table 1 is everybody who has 100,000 or less. Usually Table 2 is everybody who was above the 100,000 that you're maxing it out at 100, okay? Now let's look at it. Table 1 lists all employees who were employed by the borrowers at any point during the covered period or the alternative covered period and received compensation from borrowers in an annualized rate of less than 100,000 for 2019. So if everybody who you paid, and this, the way we're going to go through is each of those columns: employee's name, employee identifier, which is your last 4 digits social security numbers, the total cash compensation. We'll work on the average FTE and we'll show you how you can do that. and obviously we'll work on the hourly and wage reduction portion. But this is key point. Do not include in this list any independent contractors, owner, employees, self-employed individual, or partners. Anyone who got paid as an owner, partner, or self-employed, it's not part of this list in table 1. Okay. Table 2 will list obviously the same. The borrower at any point receive covered during the covered period alternative payroll covered whose principal place of residence is in the U.S. They must have a residence in the U.S. Receive compensation from the borrower at an annualized rate of higher than $100,000 in 2019. The 8-week period cannot exceed $15,385. Okay, so your cash compensation there will always be $15,385. And since they were salaried, your average FTE should be 1. You need to still calculate it, but it should be 1 at that point. Now let's go through the instructions. Employee name, obviously list each employee. Employer identifier, the last 4 digits of the employee's social security. Cash compensation, gross salary, wages, tips, commission, paid leave, all of that adds up, and make sure that it's less than 100,000. Okay, and average FTE. This calculates the average full-time equivalency during the covered period. Now, the way they do it is they calculate as full-time 40 hours. That is the base that they're using. So if you calculate base your full-time at an average of 35 hours, you can use 35 divided by 40. It will give you a new different FTE. Okay.
And we'll be looking at some examples of this, by the way.
And there is a reason to, yeah, we will be looking at some example on how you can use this. And there are benefits of how to use one or the other one. One is obviously being exact, which is 35 divided by 40 or so. Or anybody who's 40 is 1. Anybody who's less than 40 is 0.5. Okay. Now there is some pros and cons in using each one of those. Okay. So you may have to run the numbers both ways to see what covers and what is beneficial for the for your particular company. And obviously looking at the salary and hourly wage reduction used to determine whether the borrower's loan forgiven amount must be reduced to the statutory requirement concerning reduction in employee salary. We're going to go through that. There is a way to get back to the original number without having to go through all of those processes, but you still have to calculate it and see how much is going to be your reduction due to the salary hourly. So the average FTE takes care of how many employees. Salary and wage reduction will take care of whether there were some adjustments to the pay. Okay. And going back to table 1 breakdown, cash compensation again, salary, wages, cash tips, payment for vacation, family medical leave or sick leave, allowance for dismissal, separation. All of that is part of your cash compensation. Does not include an individual in excess of 100 prorated to the covered period. Obviously, that would be in table 2. Any compensation of an employee whose principal place is outside the U.S. Qualified sick leaves if you had taken any benefits from the Family First Coronavirus Response Act. Okay, so if you had taken any tax credits or payroll tax credit from those, they are not included in this part as compensation. So I think so this is the first time we kind of address that point, correct, Margie?
Yes. And again, this is a completely separate piece of legislation that came out way after the CARES Act that specifically addressed an expanded responsibility for small businesses under 500 employees for paid sick leave. Although, just to be clear on that point, since we're not going to linger too much on it in this presentation, you do have some leeway if you're a business with less than 50 employees, which is most of the folks on this call, surely, about if someone is vulnerable to COVID-19 and doesn't want to work, yes, you'll be eligible for a tax credit, but that's being handled completely separately from the PPP, and that tax credit is something that actually you have available to you, but being under 50 employees, you actually may have some leeway about whether or not you actually have to cover that person's time. It goes back to whether or not they're a key player in your organization, and whether it threats the financial viability of your organization to cover them under the Paid Sick Leave Act. And again, any more information on that you can find through the FFCRA, and there's an owner's guide around that as well.
Okay, average FTE is to determine the full-time equivalent employees for 8-week period. For each qualifying employee, determine the average number of hours worked per week and divide by 40. And rounding to the nearest tenth. The maximum amount for each employee is 1. Obviously, option B is to use a simplified version of 1 for every employee who worked 40 hours and 0.5 for every employee who did not meet that standard. So as an example, we have borrowed 100,000, incurred 100,000 of eligible for forgiveness. For the 8-week period, he had A, average 45, B, average 40, C, average 28, and D and E, average 20 hours per week. That during the covered period. The next slide, please. We'll tell you how to calculate. For option A, you take the 45 divided by 40 is 1. 40 divided by 40 is 1. Again, 28 divided by 40 is 0.7. And D and E is 0.5 each. Okay. And we use option B is 3.5 FTE, while the option A is 3.7. Now, you may question which one is better or which one is worse or which one is more beneficial. You do have to run it because this is for the covered period. You have to do the same calculation for prior period before you start using this. So again, you have to look what was before, what was in between, and what we're going to try to show you is what can we do post, prior, during, and post. And you do have a way of calculating post, or at least know where you need to be post, and which happens to be your June 30th date. Okay.
So just my comment on that is this is a way of sort of gaming out your options so that you can ultimately compare this FTE total to what you had before the crisis, so you can see what's most optimal for you to get the most forgiveness out of this loan forgiveness application.
Okay. Now, for each employee of table 1, you have to do step 1, 2, and 3. Okay. And as you can see, it can get very convoluted and complicated if you had to do, but the key here is, and the takeaway that I would like you to do is look at the dates. The dates become very essential for you to. One of you obviously is January 1 to March 31st. And obviously what was the annual salary during that period. They become essential. Those are the dates. Step 2, again, you look at hourly wages between February 15, 2020 and April 26, 2020. And you also look at specifically date of 15/2020. Like I said, there are very specific dates that you need to make sure that you have that very clear. And obviously enter the annual salary or hourly as of June 30th. Now, June 30th is not here yet, okay? So you do have a way of not playing, but you have some room to grow or to be more proactive to get to that number. And the number is going to be looked at from 2A, okay? 2C and 2A needs to balance out somewhere along the line for you to be able to figure whether how much is your loan forgiveness. So those 2 dates, again, February 15, June 30th, you can plan a little bit and be proactive of where you need to be. You have about 5 weeks, like I said. And then obviously step 3 is to determine the salary hourly wage reduction. This is how you calculate it with the 75% and so forth. We'll go through some examples right now, an example to kind of navigate step 1, 2, and 3, okay? Hopefully we will answer some of your questions on how to navigate. Okay, example A, For example, employee A was paid an annual salary of $100,000 for 2019. Employee was paid $8,000 during the 8-week period. So obviously his salary for 2019 was 100. He may have some bonuses. He may have some, overtimes or whatever, but he got paid 100. But because of the crisis, you dropped the salary to $8,000 during the 8-week. And basically you paid him $1,000 a week. Employee A was paid $20,000 for the period January 1 to March 31st. So prior to that, he got paid 20. So let's look at step 1A. Average annual salary was $52,000 during the 8-week period. 8,000 divided by 8 and times 52. Step 1B, average annual salary was $80,000 for the period 1 to March, which is 20,000 times 4. Okay, so step 1C is you divide the 52 divided by 80, he's at 65%.
So this is like comparing before and after, right? Where he was before the crisis happened and where you are now, he gets 65% of his pay. Okay.
So right now he is at 65% of the threshold, okay? So now you have, technically you could have an issue, okay? Doesn't mean that you do have it yet, but there is step 2. Continuing from the previous example, on February 15, employee A was paid an annual salary of 75. So if you look at it on that period, on that date, if you analyze that, he was at 75, not even 80,000. So after the COVID-19, his salary for the period February 15 through April 2026 was reduced to 55. So again, those are the dates that you kind of need to keep in play. And these are all different calculations. And as you can see, as we go through this, it's very easy to make mistakes, okay? And my concern is that you may land up with a loan, but was reduced to 55,000. It was further reduced for much of May, which is what resulted at A being paid only 8,000. By June 30th, however, A's annual salary was increased to 75,000. This is the example. I am going to say that after all of this, at 75. Even though A's salary has returned only to the amount he was paid on February 15, and not the amount he was paid throughout the first quarter, 80, the safe harbor is made and no reduction is going to be required. That means right now, the way it stands, if this example is correct and we do it this way, even though he was at 65 during the period, you will have no loan at this point.
Okay, so let me step in there and just make sure I'm understanding this correctly.
Right.
So 65% in step 1C would put you under the threshold of 75% of your loan being to payroll, except that you can basically game the time periods here a little bit and make some changes as you get closer to June 30th so that you can get closer to that 75%.
Right. So what this company or this person did was, hey, I need to get him back to $75,000 in some form by June 30th. And if that's the case, I do not have a reduction in my forgivable amount.
So again, this is an opportunity now to make some changes going forward so that your math ultimately by June 30th ends up meeting that 75% threshold that's required in the legislation.
Right. So taking that example and breaking it down into step 2 and 3, we'll look at it this way. Step 2, annual salary at February 15 is 75,000. Average salary between February 15 and April 26 is 55,000. Obviously, 2B, this 55 is lower than the 75,000. So now we go to step 2C, which is enter the average annual salary of June 30th, 2020, which is 75. Now, because 2C, the 75 on June 30th is equal to February 15th, I do not, my safe harbor has been met, and you will enter 0 in that column for that employee. That means I'm not going to be reduced anything because of that shift in those pay up and down salaries. Now, step 3 is if I had not met, the hourly reduction, salary reduction will have been, this is how you will calculate it. Okay, I got 80,000 multiplied by 75 is 60. Subtract the 60,000 that you just got with what you paid him, which is 52,000. And then I need to figure out what my reduction is going to be, which is 58,000 divided by 52 times 8. And that gives you 1,230. Now that 1,230 is what you will be putting in that column instead of 0. So hopefully I didn't lose people on this process, but that's why my concern is a lot of people will not do all of this exercise and you will land up with a loan.
And we say that just because, again, we're trying to maximize the amount that you can count toward forgiveness.
Correct.
On this. And again, in the case of this 1,230 that's left over there, that's the amount that you would have left unforgiven, right, for that
Correct.
salary, for that individual.
Correct. For that individual. Now, you have to do that for every single individual. And the total reduction is the total of all of those in that column.
But again, the good news is we still have a third checkpoint, right? That third checkpoint is June 30th. So you can make some changes between now and June 30th so that you have a higher percentage of that money paid out to employees that in fact is going to be forgivable.
Right. And that's, you know, you have some time to be proactive in this situation. And now obviously there's still new changes coming up and new modifications coming up. So, but as it stands right now, we have those, these are the guidelines. Now, again, I cannot stress the fact of you have to keep in mind those specific dates. Those are the dates that they're using as benchmarks. So that's a good thing. A good thing I have something to work on. Okay, and I have a final date, which is June 30th. So I can look at it now where I need to be and see what needs to be done. And if it's not possible, that's okay. That's nothing wrong. You get a loan for 1%. It's just we're trying to minimize that as much as possible. Okay.
All right, so as a lead into this next section, what do you do if one of your employees bails on you, wants to do something else, and doesn't come back, even though you had planned for their salary to be covered in your application?
Right, and that's where the reduction of safe harbor, that means I am allowed to enter a 0 for that employee, even though I may have a reduction for that, because either he quit, he decided not to come back, and it will not affect my FTE status. And that, again, like we went through that example, you do have the FTE and the hourly, and they have to kind of balance back and forth. You have to kind of balance the two. It's not just one or the other. It needs to be balanced. So you need to look at both sides and see which one you can get away with things, or not to get away with, which you can lower your loan or forgiveness to be as little as possible if you're going to have a loan at the end. Okay. So enter the sums of amounts in each of the columns. Again, you have to add all of those numbers and they'll give you a total FTE numbers. And that's how you get the total. Now, we have to do the same exercise for the period before and for the period during the coronavirus, your 8-week period. And also make sure that you are back on June 30th to the sum of all your original FTE amounts.
So just to clarify here, what I'm getting at really with my question before is, if somebody does not want to come back, two things I want people to be aware of. If someone was offered their job and they decide to go take unemployment instead, they're technically not eligible for the unemployment. So that's part of it. And that's really on the employee who decides not to come back. However, if you are just sort of restating what's in here, but I want to make sure it's really crystal clear. If somebody decides as an employee of yours that they want to leave and go do something else instead, that maybe isn't going to be more lucrative for them, whatever the reasons, just make sure that you have something in writing. And it could be as simple as an email saying, Joe, you're offered your job back starting this date because, let's say it's June 1st, we're going to have the organization back open again because tourists are coming back. And if they decide not to come back, just encourage them to reply in an email, no, I found something else, whatever it is, you need something in writing and they will get you off the hook about that particular FTE if they are providing with you, for you in writing that they were offered a job and they turned it down. That covers you. Just make sure you keep that for your file.
Right. And one thing that came out on Friday night's new guidelines is now the employer is supposed to advise the state unemployment that employee A has not, it's not going to come back or has decided to stay. So they're putting that ownership on the employer right now, because obviously the employee is decided not to come back because it's more convenient or more profitable for them to stay under unemployment. So again, it's this new guideline, and I'm not sure how that is going to be able to be done or controlled or managed, because it just came out on Friday night, just before the Memorial Day weekend. So I was reading it and I'm saying, yeah, that's great, but how are we going to monitor this, and how are we going to? So obviously it's putting it on the employer to notify the authorities that employee A or B or C has refused to come back due to unemployment issues or possible. So again, having those documentation in with yourself and having proper written documentation to cover yourself during this period, not only because of what they may require, is primarily for the FTE reduction. You want to make sure that it doesn't count against you in your reduction. Otherwise, if you don't have that, it will affect your final number.
But I will say on the positive side, you do have some flexibility as an employer. If you decide that you want to increase someone's hours over what they had previously, or what you maybe would have planned for them in your application, you can increase their hours and you can decrease someone else's. You can add other individuals to replace the person who left. As long as your head counts and your amounts meet the right numbers, you're fine. You've got flexibility to get that done. So there is some flexibility, but again, you need to account for what happened, especially if someone leaves.
Right. And one of the questions, and I have employers, I have clients who have, what about overtime? Do I pay overtime? Yeah, you can pay them overtime, but remember, as far as FTE is concerned, full-time employee equivalency, if you pay them 45 hours, as we saw in the example, it counts as one. Is it better to get one more employee for even 10 hours or 15 hours extra? That's something you may have to talk with your accountant and see how it kind of works in the whole process of your business. Because obviously one of the key factors is the FTE and obviously the salaries. So, the ones who have increased businesses have no problem. The ones who had decreased business and not have enough work for all the employees may have some other issues with that. Okay. So
we're aware that because of the fact that we had the keys closed off entirely for all the normal tourist traffic, a lot of people are in a situation where they overestimated how much, in fact, they would be paying employees as opposed to underestimated. So that's part of the reason we bring this up. There's some flexibility.
So hopefully we can, again, look at the dates, keep an eye on the dates. Those are the key points that you need to know while navigating through this process. Okay. Next, please. Next slide. Okay. Now we're going to go through these are some of the FTE reduction safe harbor. Step 1, enter the total FTE on February 15th and April. These are, again, they want the actual numbers. You need to know the numbers. Okay. FTE on February 15th, June 30th, all of these asking specific questions to those timelines. Okay.
Let me get back into here. Step 1, 2, 3, and 4 at the top here for the FTE reduction safe harbor. That's for, you're saying total average for the entire organization? Or is that entire average FTE for each
Yeah,
person?
it's for the entire organization. You have to look at it as an entire organization. It's not for that one employee only. Okay.
Thank you. Should I move on?
Okay. Yeah. Now this is the example. I'm reinforcing the FTE because it can get complicated. It is very tedious to do. And if you have 3 or 4 employees, it can be easy. But if you have, the higher the number, the more tedious and complicated it can get. So example A, we're using company borrowed 100,000 April on April 10, incurred 100,000 for eligible forgiveness, 8-week period. For the 8-week period beginning April 20th, the employee had the following employees. Average A, 45 hours per week, B, 40 hours a week. Obviously, to 28. So he came out with a number that we did already of 3.7 or 3.5, depending, on that. For 8-week period, we had 3.7. The option B is 3.5. Okay. Now, by doing this math, okay, 1 second, let me put this slide a little bit lower here. By resulting in a larger number, assume further that for the periods February 15 through June 30th, 2019, and January 1 through January 29 had the following employees. Now, you have two pay periods that you can use. You can use 2019, or you can use, again, the 2 months prior to the crisis. So you're going to run those two numbers, and you're going to find out that average, obviously the business was doing better, was going up. Average, A average 45, B average 40, C average 40, D and E was at 28, and F and G, he had got 2 more guys, average 40 hours a week. Okay, that puts him, the period was 6.4. Okay, now he's at 6.4 during those periods. Now, according to Matt, he's obviously below the 3.7 or 3.5. So obviously he's going to use the 3.7 to come out with a number that he's going to be forgiven for. Okay, so he by rule, the way it's set up, you are supposed to take 3.7 divided by 6.4. So technically, your loan for 100,000 is now at 58,000, more or less. Okay, so that means you landed up with a loan of $42,000 as it stands, the way this is reflecting.
Okay, so just to be clear on this page, this is an important part of what everyone's doing
Right.
here. So the 3.7 FTEs in the top paragraph in your example,
Right.
by doing the math that way, you had 3.7 FTEs. By doing the math under the simplified method, you had
Came out
what?
to 3.5.
Okay, and then for this 8-week period, you had 6.4 FTEs. How did you get the 6.4 again?
The 6.4 came out by using the period of February 15 to January 1st to February 29th, and June 15 to June 30th. So it comes out to be during that 8-week period, which is June 1st to February 29th.
So what we're really seeing is the relationship between the number of FTEs you end up working out, depending on which assumption you use, whether you want to use the 0.5 or you want to use the real number divided by 40, really affects on the bottom line here at the very last line, which is, okay, what's your total number? And what is the difference between that number and the number you put in for your application that you are going to be using to cover employees' payroll?
Correct. And the key point is, because I'm using the 3.7 and I'm using the detail factor of how much is each, I have to use the same method in calculating for the prior period. I cannot use the 3.7 and use the other method, the option B, for the prior period. You have to use both at the same way. Okay.
So are we going to talk about how we address this gap then?
Yeah, we're going to address the next slide, how we now, obviously you're not happy with the $42,000 loan that you wanted, but continuing the example, 4.2, we look at it again in detail. We look at February 15 to April 26, and we found out that it's 4.2 FTE. And we found out that at 4.5 FTE was on February 15. Okay. Now, guess what? I just need to make sure that I need to get back to 4.5, not to the 6.7. If I get back to the 4.5, no reduction in forgiveness.
Because 4.5 would be 75% of the loan, right?
Right. That's where the number is. That key date, February 15. So now I have time to do what I need to do, figure out where I need to be so I can go back. So all I need to make sure is, provided the number of FTE on June 30th is equal to or greater than 4.5, I don't have a loan.
Got it. I think that's really what we're all looking for here, making sure that we maximize the amount that is in fact forgiven. Okay.
Right. And this is, I know it's complicated, and I'm sure that your accountants will be up to the stats of making sure that this is it. And to make sure, just to make sense of this reduction, is the SBA will first determine the period, during the 8-week period. Ultimately, this is what they want. They want you to be prior to where you were before. Now, the date they're using as a key date is February 15th and June 30th. Like I pointed out earlier throughout this presentation, is those 2 dates become very critical in your calculations. Now,
So
they
again,
have in between the periods that they're calculating to see what happens in between all the cycles that you went through. But for you to get the forgiveness, February 15th and June 30th are key dates.
okay, so again, back to your own text here, if the borrower can return its number of FTEs at June 30th to the level it was prior to COVID-19 pandemic beginning, which they're saying is February 15th, forgiveness
Right.
will not be reduced. Even if after February 15th, those numbers are less than they were in 2019 or the average of the first 2 months of 2020.
Right. Because
Got it.
they want you to get back to where they were ultimately. Now, there are a lot of variation, and there still may be some new variations coming out, but I'm assuming that I'm not the only one who figured these out. There's whole other guys out there who figured this out, and they're going to take advantage of it in one way or the other, and they may close the loopholes, or they may do some changes. At this point, it's anybody's guess. But
Yeah. We're not speaking to new legislation, and what we're seeing most likely based on, I believe, what Senator Rubio put forward a few days ago, and I believe Pelosi is putting forth this week. These are all about extending the amount of time you have to pay it back. We're not talking about getting new money for a beyond an 8-week period with any of those
Right.
changes that are being discussed.
Yeah, and that's it. And going back to, and I want you to understand, all we did was work on the Schedule A worksheet. That's all we spent all of this past 10 slides or so, just going to table 1. Table 2, like I said, is very simple, and going through the reduction safe harbor process.
So I'm going to stop us here for a minute because it's about 1 o'clock, and I want to get to the Q&A at this point. If you think we can move forward on that. I know we have some more, actually, this is pretty much the content we're focusing on, because we feel like that's the trickiest part. And we know a lot of people in our chamber are trying to do this on their own without the benefit of having an accountant do it for them. So that's part of the reason we get into this kind of detail. But if you don't mind switching gears, Roger, I'd like to switch to the Q&A. Let's see how much we can get in the next 10, 15 minutes.
Okay.
Okay, so I'm just going to scroll down here. This looks, it's not clear to me they're talking about PPP or not. We've applied for disaster loan assistance on April 4th and received a confirmation number on April 27th. We called them, said our application is being processed. As of today, we haven't heard anything yet. What do you think we should do? That's clearly an idle question. And as long as your loan number, which is the on the economic impact disaster loan, starts with a 3, it is in process and they will reach out to you. If your loan number starts with a 2, do go back. That means actually you're in the earliest batch that needs to go back and reapply, and you can actually do that on the idle site. Even though it's closed to most applicants, it is open to you if your loan number, in fact, starts with a 2. You can go in through the website.
Correct.
Sorry, that was an idle question, but in case anyone else had the same question, anybody out there should be looking at their loan number and making sure it's a 3. If it's a 3, you're good. They will get to you as soon as they can in the order it was received. If you were a 2, you need to reapply. That's not something the SBA was reaching out to folks to tell them. What is considered transportation for forgiveness?
Transportation, now, if you were giving, gas, vehicle gas, or things like that, that's what they are. I'm considering right now. Obviously, under the shutdown, you may not have had a lot of vehicle activity, transportation activity, but right now they are considering that.
And I think in some employers, for example, you might even get like a Metro card or something, not something that's key since we don't have Metro transport, but I think that's what they have in mind.
Or you had to pay parking for people in buildings to have things like that. Those were transportation costs that they were part of,
Will any W-2 payments to owners of the business be considered for debt forgiveness? So where do you put the owner's pay? I think what they're saying.
The owner's pay goes in the separate portion of the applications. So that's a line item by itself, okay? So you're not included in table 1, obviously not included in table 2. You are included in a separate line item. Let me look.
Okay.
Up front here, so.
how is the application different from LLC, for an LLC from a sole proprietor?
Pardon? Can you
How is the
repeat that? Sorry.
application different for an LLC than from a sole proprietor? I don't see how it's different. You're just taking sole proprietor, you're taking out your Schedule C, your income, right?
Right, it goes back to your Schedule C. It will be under your LLC type. Again, your accountant. Now, what happens is there are some variation. If you are a single member LLC, your accountant most probably may have requested you to, recommended you to do it as a subchapter S for filing purposes. So again, there is some of that difference. So you have to go back to your accountant and see how you were applied originally, okay? If you're still doing it as an LLC with multiple partners, you're okay, but you have to have a separate line item. Again, you are a partner.
Okay, can salaries be increased during this period?
Well, as you can go through the process, as long as you're increasing it to get back to the original levels, okay? Like we did in that example, the gentleman, employee was at 80,075, went down to 55, and then went back to 75. Yeah, you are going back, but you cannot go above, obviously, the 100 that you had in the past, okay? And you cannot go above the 80, which is your prior period. So those are two kind of limiting factors that you have to keep an eye on.
Okay. This next one, I think a lot of people have the same question. I was paying my employees before I got the loan. Is that amount forgiven? This has been an issue for a lot of folks because the time period that it starts is the day you got dispersed the PPP loan. And a lot of folks were keeping people on staff before that and just patient of getting the PPP loan.
Well, what happens is, and this is one of the key area is, how do you, if you have it in your books that you owe that employee money, yes, you can go back. But if you already paid for it in the prior period, I'm not able to count it because it calculates it on when you paid that due. It has to be paid during that 8-week period. So if you're paying past payroll during that 8-week period, it will count.
And just to that same point, the adjusted pay period you mentioned earlier, that's really just adjusted for, let's say your pay period would have started on April 26th, then you got the loan on the 20th, you're just adjusting it forward to the next pay period, right?
Correct. You have to pay it within the next pay period. So if I owed somebody, well, let's say I owed the rent of April and I got it end of April, and I paid it in April before the next pay period, guess what? I can pay that April rent will count as long as within that pay period. I paid it within that pay period. So it's kind of, they calculated that you must have made those payments during those 8-week period. Now, if you owed it prior, you have to show again documentation that this is what you owe.
Okay. How do I handle an employee who was salaried but then converted to hourly during the covered period?
Can you repeat that again? Sorry.
Yeah, this is. I'm not sure how common this is. How do I handle an employee who was salaried but then converted to hourly during the covered period? I don't know that it matters. You still have the same.
No, I do have an employee. I do have a client that just did just that. It was salary. Now you must have made a change in the job description and job pay scale, saying that he or she is going back to an hourly wage because of salary base. So yes, you can make that change, but you must have it documented. You just cannot come out of the blue, okay?
Can you include rent or lease payment for storage of equipment if the lease was enforced prior to February 15th?
Yeah, you can include leases and rent because that would count under your rent, basically.
So not just office space, but other kinds of rent.
Right, yeah, lease. Because if it's part of the business and it was there prior to that as a lease payment, yes.
I applied and just submitted my 941, this is payroll taxes, for first quarter 20 because I have not filed 2019 taxes as of yet. This is a newer business. I'm not sure what the question is.
Yeah, I don't, yeah.
Okay, maybe we can come back to that. Will 1099 employees be considered for debt forgiveness? I think we know the answer to that is.
Pardon, which one?
Sure. I'll go ahead and take this one. Will 1099 employees be considered for debt forgiveness? In the original legislation, it looked like it was going to be, but the SBA has been very consistent since the beginning, actually, after about the first week, that 1099 employees would have to file their own PPP loans if they wanted to. They would not be eligible for debt forgiveness under the employer, under another employer. So if I have 10 employees and they're all 1099, none of them are eligible under my employment.
Correct.
Debt forgiveness.
Right, yeah, because they will not be included in either table 1 or 2.
I'm a single member LLC with a work from home business. Since I can only use the loan I received to cover 8 weeks of pay and a small percentage of my rent and utilities are deductible, it looks like I will have about $800 or more left over that I have to repay. Am I able to use some of the PPP money toward my individual healthcare payments or personal retirement plan?
Okay, yeah, you can use the $800 if it's not part of your, if it's not forgivable. Yeah, you will have an $800 loan, basically.
But bottom line is no, it will be a loan. It will not be considered forgiven.
It will not be forgiven. You'll end up having a loan. Okay, and for all of those deductions, you must have taken it in your Schedule C for 2019 to be eligible.
For an independent contractor or self-employed, in terms of loan forgiveness, do they have to pay themselves through payroll 941? They did not pay themselves through payroll in 2019. So let's say you're an owner distribution, right?
Right. If you were an LLC, if it was an LLC, does cover it because you do end up paying the taxes, even though it's a pass-through. But if it's your 1120S, what happens is distribution, is return on investment. It's not considered a salary on that. It's considered as investment return.
I was under the impression that we aren't supposed to lay them off. Well, let me just take the high level on this one, and that is every single one of these programs that came out from the federal government was entirely for the purpose of making sure that you do not lay off employees where possible. That was the goal anyway. So the way in reality it's worked out, they've clearly made made some room here for you to rehire someone that you did in fact lay off. If you did lay someone off, you could bring them back. That was the whole idea. So if you want to take the rest of that, feel free. But true, that was the whole idea, to not lay them off in the first place. We know sometimes that happens right away though. And so we want to at least incentivize you to bring them back. We being in this case, the federal government legislators that put this together.
Right, yeah, the original intent was for you not to lay off people. That was the original intent. Obviously, the rollout and all the issues has created what we have today. And all the closing by states and areas has created other issues. So now they're trying to fix it with all of these FTEs, increasing it from 8 to 12 to 16 to 24 weeks to try to kind of find a medium to kind of satisfy all the major nuances that possible. And honestly, it would not cover everybody. It would not cover all the bases. As long as it can cover most of it, I think so. That's what they're going to try to do.
Okay, I'll take this next one. What happens if payroll costs are higher than 75% of the loan? Great, fine. If it's 100%, wonderful. 75% established to give you some leeway.
Right, that's got to be the minimum. If you use all of it for payroll, fine, you're okay.
My understanding is if the EIDL advance was not used for payroll, it would not need to be paid back. That is not true. If it was taken at all, it needs to be paid back. Again, it goes back to we're not getting duplication of services or benefits rather from the government.
Now, there is an issue there that still needs to be clarified at least in my view. I don't know how they're going to deal with it. People who got the EIDL loan originally, they got up to 10,000 and they got a higher amount than the current 150,000. Okay, I have clients that got $300,000 and $400,000, and what happens is when they got that money, there was duplication of benefits because they calculated the whole thing. The issue is once phase 2 came in, they dropped it to 150. I don't know whether they're going to create duplication of benefits based on that. I got to see how they're going to answer that specific detail. I haven't seen anything on that aspect of that.
But as it relates to PPP for the loan advance amount, that up to 10,000, that is an answer. We know that 10,000 up to 10,000, depending on how many employees. That's
definitely going to be impacted, and it's going to be automatically lowering. So if you got 100,000 on PPP and you got $10,000 on EIDL loan, your maximum as it stands right now will be 90,000,
That is
not
forgivable.
110. Okay.
As a single member LLC, do I list myself on table 1 of Schedule A as an employee? PPP Schedule A, line 9 indicates that I do not. Just want to be sure that I should leave that blank. Where do you list yourself as a single member LLC? Do you list yourself on table 1 of Schedule
Looking,
A?
you need to kind of go back to me on that one. Schedule A, you're looking at it, right?
Yeah, hold on, let me go back and look. The page I have is the worksheet.
I have the Schedule A here. Which line item did she mention, or he or she
Schedule A
mentioned?
line 9 indicates that I do not. Just want to be sure. So she's asking if she should list herself on table 1 as an LLC owner, as an employee.
No. To owners or partners, you will not list yourself under table 1. You will list yourself under line 9.
Okay. All right. Is health insurance payment included in cash payments? If employer pays 100% of employee health insurance or 50%, so they're asking if the health insurance amount that you pay for that person is included in the cash payment.
Well, it's a cash payment that you did on their behalf. It is a benefit they get, no doubt about it, but it is a cash payment that the business made towards their benefit, just like the 401ks, just like a sick leave, and so and the other payments you made.
But to what we were talking about earlier, that's still, we're talking about that $100,000 cap is still total compensation, which would include the money you put toward the health insurance.
Right. And this is, again, a lot of people will find, will wake up to a rude awakening that, that $100,000 is not salary, it's everything else.
And if this was not clear to you at the beginning, it wasn't clear to most of us at the beginning. This is only being
right. It was. Well, we had an idea that, compensation originally was said that was going to be including all of that. But I think so now with the forgiveness loan reinforces that point, even though it was a little bit vague in the outcome on the original PPP loan, because they were only looking at the salaries. Okay, remember they were giving out 941s, they were looking at the 941s as the base. Okay. Now the details is coming out to be a little bit different.
So if you pay salary and commission through the payroll company and you pay the car allowance separately, do you have to add as well on the cash compensation?
Yeah, those car allowances, I know those people
All
who get car allowance, it's cash payment.
Okay, all part of the same number, got it. What about owner employees or independent contractors? I think she's asking where they're supposed to put them filled on the form, and I think there's a separate spot on the form. Right?
Yeah, the owners, or if it's an owner, you can put it on line 9 on the application. If it's a 1099 employee, they're not included in table 1 or 2. They're not included in your application.
Okay. Can a sole proprietor claim 100% as payroll for example, a charter captain with only himself as an employee? So can you, basically, that's the question, can 100% of your payroll go to yourself as an independent contractor? I think the answer is yes, right?
Right. If you got it, obviously it was based on you originally, not on your independent contractors.
Okay. So an owner who holds a manager position cannot include his salary in the application. That's false. It just has to be moved to a separate part of the application.
Right. You will be, that's correct. You will be like the other person came out, and you will be under compensation to owners, line 9 on the application. How much was your compensation? They want to make sure that, you didn't pay yourself more.
Okay. Is cash compensation gross or net?
Gross or net? Well, it will be based on your 941s, basically. Remember, they're going to allow you to put all the tax, local tax and state taxes towards it. So all of that will be added. So you will look at your net plus.
Will you be covering sole proprietor LLC option here?
Sole proprietor LLC, they'll have to go through the same process, same application. It's just in looking at the application, it will be quicker and easier. Reason is you'll only be looking at Schedule Cs. Okay.
Okay. That's clear. I'd hired new employees during the period of forgiveness. Can I use these employees' compensation on the calculation?
Yes, because even though you may have employees, let's say for argument's sake, you had 10 employees prior, and now you went down to 8 or 7 or 6, and you came back to 8 and 9 and 10, you have to go through that variation, and you can bring in, they don't have to be the same people, mind you.
Yeah, that's the important thing. You got flexibility. It's just the, what is it, the head count that you want to maintain.
Yeah,
Especially again,
right. And the way they're balancing it out is what they call the FTE. Now, in the past, remember when they were doing, when they gave you the loan was based on 100,000, I mean, on your full count that came on 941s. Now, in your 941, it did not make a separation whether they were full-time or part-time. There was no way of calculating that. So now when they're redoing it now, they're looking at 941s also, but they also want details on how you were calculated in the past and now, so your FTE, so all part-timers are included in this process, but in a different method. So you have to do the math and go through all of those exercises just to
Okay,
get there.
so I've got someone who asked this question, will he cover more in depth how to apply for independent contractors? I'm going to answer that by just saying it's the same process. It's simply a lot simpler if you're just an independent contractor. It's one
Right.
employee.
If you're independent contractors, yeah, you only will be yourself. It's an LLC or Schedule C. So you'll go through the process of not having, if you were the only sole person, you'll be the owner.
Okay, so which are the best lenders or where to find the list of lenders? I know from looking at something that just came out yesterday, as pretty recently, First State Bank was telling folks locally that they were still doing PPP loans. I know First Horizon is still doing PPP loans. As of last Wednesday or so, Florida Keys Credit Union was doing them as well. But if you want a list of who's doing PPP loans overall, no matter where you live, the SBA.gov site has a link there, lender match.
Right.
So SBA.gov/lender match. But again, locally, I know today the First State Bank and First Horizon for sure are, and Florida Keys Credit Union had been recently, even though they don't normally do commercial loans at all.
Right. Yeah.
Okay. In case it's not covered, I want to ask how a sole proprietor owner who elected seasonal business, average annual income calculated using the time frame between February 15th and June 30th, 2019, when determining loan amount, pays himself to get forgiveness. And then also what documents would qualify as proof for forgiveness. I think we covered that in the very beginning.
Beginning, right? Yeah. They're looking at, you can look at the 4.5 month period of 2019 as a one base, and two months of this year as another base. You do have some election there. Now, obviously, if you were in this year, then you can use February 15 as a base. June 30th is still in the out there. Okay, so it is. If you are seasonal, you got to look at it from last year's number, most probably. That's the only way that I know of right now. Okay.
Okay, I'm gonna ask another one here. Is it possible to include 1099 contract workers? I think the resounding answer has been no through this whole process at the very beginning. As far as a copy of the screen presentation, we're gonna make that available. We'll actually have it as a recorded YouTube link that we'll send back out to Judy so she can send it out to anyone who participated. I think that might, yeah, we'll go through Judy and we also have a list of who was on this as well that we can send the link to. But if nothing else, Judy will have a copy of it recorded. Hopefully, within the next 24 hours, we'll have a recorded version of this entire thing. If an employee was discharged, not due to business slowdown, just prior to receiving the PPP, and we hire a replacement, are the wages paid to the new employee deductible?
Yeah, the new guy would be, if you dismiss the other person and you made a good faith to bring him back.
Okay, so the other question is related to this actually, so going back to documentation of someone who left. Either they chose to leave and they took another job and you offered their job back and they said, nope, I'm good. Is text message acceptable? I've seen a few examples of this with my clients, and I would say email is the way to go because it's a much clearer date stamp.
Yeah, you're right. Margie, you're exactly right. I don't know whether text would be acceptable. Email is an acceptable format of that. And also, obviously, a letter is the best. Okay, official letter is the best, but email is an acceptable form.
Anonymous attendee here, part-time employees do not count in the 75% payroll calculation. That is wrong. Part-time employees do count in the 75% payroll calculation, absolutely. But remember that 75% of your entire loan amount. So whether that's made up of a lot of full-time, a lot of
part-time, I mean full-time or part-time, that's why they came out with the FTE.
If my employees are working full-time hours and have been working full-time hours throughout the COVID-19 crisis, does the FTE reduction apply to me?
Well, if all of your employees are working full-time and they all want, then you should be exactly the way it was before this crisis. So no, you'll be fine. But if you had any fluctuations or lower the salaries or lower the pay structure, remember there are two pieces. One is headcount, the other one is the salaries or compensation. So you need to maintain both of them in some form.
Are the payroll payments to owners considered forgivable? And I think the answer is yes. You just list yourself in line 9, right?
Right, you put yourself in line 9, correct.
Will W-2 wages paid to owners under 100K be forgiven? I think the answer is yes, right? You just document it.
Can you repeat that question again?
Sure. Yeah, I think they're treated like everybody else. Will W-2 wages paid to owners under 100K be forgiven?
Right, you can, but then we will go under line 9 because you are the owner.
Owner pays on payroll. I'm not sure what the question is. Owner pays on payroll are not covered. So if owner pays himself, I think they're trying to say on payroll, are they not covered? If they pay themselves on payroll, they are covered. They just put themselves
right. If they're not paid and they don't take a shareholder distribution, if it's an LLC, now the key here is if it's an LLC, it does go through because whatever the company made, it became his income basically, and he pays taxes and unemployment taxes and all of that goes with it. I mean, employment, the FICAs. But if it's if it's 1120S, we have a problem because whatever money he got or he pays taxes is on the profit, not on whatever shareholder distribution is return on investment, period.
And the 1120S is the tax reporting form that you use for that kind of ownership. That's what he's referring to. Okay. If we cannot put owner, employee, or independent contractor into table 1 or table 2, is there a separate portion? I think we answered the same question. Line 9 is where you put your own as owner payroll information. Does the 2 months start counting from the moment funds are received? Yes, that is something that's clarified a little later in the process. Early on with the CARES Act Business Owner's Guide, it really looked like you could choose whatever 8-week period you wanted, but they changed that flexibility as it moved forward. And it's been pretty consistent. If you got your PPP loan, you look at the paperwork, it'll say the day that your loan is funded is when the 2 months start. We realize everyone is in kind of a difficult position here because a lot of folks have been paying those, their employees for 3 weeks, 4 weeks before that, thinking they had the flexibility. And it turned out that ultimately they don't. It has to start the 8 weeks from when that loan is dispersed. Any additions to that, Raju?
Yeah, yes, correct. If you owe them the money and you pay them during that 8-week period, yes, you can count it. But if you already paid them, you can't go retroactive.
Any place where there may be sample templates on Excel to track all these baseline information?
No, I was working on that and I didn't get it done yet.
Miguel Cardona is asking another question. Is the forgiveness application due after June 30th, 2020, or can you submit before June 30, 2020 if your 8-week period is completed before June 30th?
Okay, you can do it before if you want to, technically. But if you're going to have a loan, when you do all of these exercises, maybe the best way to answer that is do your calculations, see if everything is fine. If everything is fine and you are back to the February 15 date and you're able to meet all of the criteria and you don't need the June 30th date, yeah, you're fine and you don't have a loan. But if you land up knowing that you are going to have a loan, there are going to be some loan money that you're going to inherit because of where you are right now, then it may be prudent for you to make sure that you get to that number in by June 30th. Okay. I don't know if any lenders are accepting any forgiveness loan yet, so I'm not sure whether they're even ready for it.
Okay, so I'm going to jump to another question here. I received $15,000 in a PPP loan. Is it true that 80% will be automatically forgiven for self-employed with loans under $20,000? I believe no.
No, I've never heard that one. So
I was paying my employees as an independent contractor. How does it work for this process? You are not eligible to get payroll protection program loans for 1099 employees. If they were independent contractors to you as an employer, then you are not eligible to apply for them. However, they can individually go to a bank and apply for a PPP loan themselves. Can you hire an employee to replace one previously employed during the application process? To our earlier point, yes. You just have to keep
you can hire, but again, if you let somebody go, it would be nice to know whether, it would be nice to have a documentation that they resigned or left or for whatever reason, documentation. Now you can hire somebody to replace that person. Yeah.
Okay. Signed a new lease on March 6th. Can we claim this? Are you talking about claiming it as a rental expense? I presume he's saying. So he's saying he has a new rental expense as of March 6th. Can we claim this?
No. As far as I know, the date is February 15th. Or the other date that they have is March 31st, but I think so it's February 15th. So you must have had that expense prior to 15th.
So I have another question on eligibility for the PPP loan. If I've still not been approved, I'm wondering if the first quarter of 2020 is sufficient without Schedule C amount for 2019, because you're talking about a newer business, I presume. So I think, what is the date at which they have to have been in business? Is it February 15th? Right?
I think so, up to February. I think so it's February 15th. I'm not 100%, but with so many dates floating around there, it's kind of
sure. So if you don't, you haven't, what I would honestly say is just either go back to the bank you applied to or go to a different bank. Again, the ones locally that I know offhand right now are still doing them for sure, are First State Bank and First Horizon. And I think the federal, what is it? Federal Keys Credit Union.
Right.
Another one, can you use part of any PPP loan to cover IRAs cashed to cover business losses? I think that goes in, I think that's no, because it would be covering sales, right? That you didn't get.
Well, can you repeat that? You want to use the PPP money for IRAs?
For IRAs that you cashed out to cover business losses.
That's honestly, that's a new one. I haven't had that one asked, but I'm imagining, or my question is going to be the same thing as if you borrowed out of your 401ks. A lot of people may have borrowed money out of their 401k to keep going.
I can see what you may do it, but I don't think they cover it.
I don't think so. They cover it. I will defer to on that question because that's a very specific. I think so. I may have to read them. They can contact me and I can try to find out something, or you can contact your accountant. But that's a very specific point to that.
Someone else mentioned here, it says, you mentioned that 1099 employee is not forgiven. So I'm going to be really clear here on what I meant there. It means that if you are, let's say you have 10 employees and they're all 1099, you cannot apply for a PPP loan and be forgiven for 1099 employees in your employee. However, each individual 1099, even though I realize that's not always practicable depending on the kind of business you are, the 1099 employee themselves is themselves eligible to apply for a PPP loan. Correct. And I'm happy to say that toward the end of this curve of all these banks providing 1099 loans, I'm finding that it's much more accessible now than it was in the first month for those much smaller 1099 employees to be able to successfully get a PPP loan, because the banks prioritize some of the bigger companies first, but now it's actually pretty straightforward to get that at a local bank. And again, I know for sure First Horizon is doing them right now because they put something out through one of the chambers. I know for sure that First State Bank is. Not quite sure if KCU still is. Okay. I'm an owner of, go ahead.
Okay, Margie, just to explain that, a 1099 is not an employee of the company. It's not considered officially an employee. It's a subcontractor, it's an independent contractor. So because of that, it will not count towards your company 1090, towards your company forgiveness.
And that's where this got a little sticky in some places. Like I know restaurants owners in Key West who had lots of 1099 employees, and they were doing things like washing dishes and waiting tables, that you would normally consider maybe payroll employees. They were using 1099s. So yes, is it a little difficult situation to expect somebody washing dishes to go in and file for their own PPP loan? I would say yes, but in the grand sense, they're still technically an independent contractor because that's how the employer chose to employ them, not as a payroll employee.
Right.
I'm an owner of an LLC S Corp filing and I pay myself as a full-time employee. Do I count as a full-time employee on table 1 or line 9? I think line 9, right?
Line 9.
So 1099 apply where in the form? Under the owners?
Pardon?
Yes. So they're asking, this is reinforcing the same question from before. So 1099 apply where in the form? Under the owners. So if it's a 1099 applying just for themselves, it's under the owners in line 9, right?
Correct, line 9. Because he's an owner, but he's the owner of his own time and his own company as a Schedule C, or so he will be under under line item.
And just to be clear, we're going to wrap this up in the next couple of minutes, but I'm going to take just a few more questions that are already in the Q&A. If you are self-employed and use Schedule C to apply for PPP, can you just write yourself a check to compensation? What would you use to prove the payment? A bank statement?
Well, you will have to use your bank statement. I will make sure that you do yourself as a check and be able to have that canceled check made out to yourself, okay? You need to have proof. Remember, again, it's going to be documentation. Again, you need to show that, yeah, if you paid, remember, they're going to give you the money to your LLC or to your however you applied for it, okay?
How do you handle maintenance of the physical facility of the business? I pay rent for the property for the business, but I also have to pay for maintenance. Maintenance of the physical facility, first of all, a couple things. You can, the 3 things that are covered under that 25% of the PPP are mortgage interest, not mortgage, but mortgage interest, rent, and then utilities. So if you're saying maintenance of the physical facility, I pay rent for the property for the business, but I also have to pay for maintenance. I don't think that maintenance is included in PPP.
Right. If it's part of your rent, because a lot of other people have CAM charges, okay, for shopping malls and things like that they charge you. That would be part of your rent because it is part of your total package.
So it just depends on your situation. If it's technically part of your rent, then yes. If it's not, then it would not be. Can salaries be increased to compensate for tips for hospitality workers? Yes.
Yeah. The thing is, that's a very vague point. That is an issue that's going to come up, and I'm not sure how they're going to resolve it. But it's a reasonable expectation. Now, maybe the reasonable need to be verified by what was done last year or prior to that period. So you need to look at it what was in the same period of last year to kind of gauge what is fair and equitable way of calculating that tips. Okay,
we're just taking a couple more here. If one of the employees was earning more than $110,000 before the COVID-19, after that we reduced the salary to $88,000, can I earn the forgiveness for that employee? Again, I think the answer is as long as all of the compensation is still under 100,000, right?
Right, it will qualify as under 100,000, but again, you need to make sure that the dates that you're selecting for your forgiveness portion needs to be within those guidelines. Like in the example we just went up, even though the person was making 100,000 last year, suddenly went down, and during the COVID period, 8-week period, it was down to 52,000, and it went back up. Guess what? All of that variation, those dates become key factors in saying, yeah, whether you're going to have a forgiveness or not.
Okay, I'm taking one more question because we do have to wrap it up.